Right. Welcome back to another episode of How I Met Your Mortgage. As always, I'm your host, Adam Smith, with Just the Tips Coaching. And with me, we've got a repeat guest on our show, although I think he's only made one prior appearance.
Yep.
So this is kind of unique. We have guests that have been on what seemed like half a dozen times over our 7 or 8 years, and some that frankly, we would never invite back. And here's one that falls right in the middle. Welcome back to the show, Anne Singleton. Hi, Anne.
Hi, how are you this morning?
I'm doing okay. How are you? It's been a minute. It's actually been about 1.5 years since we had you on the show. In fact, I was looking at it earlier. It was the first week or two of June of 2023.
Oh, wow. Okay.
So yeah, it's been a minute.
Yeah.
All kinds of things have gone on in real estate.
Oh, yes.
Lending since then. We could have all kinds of things to talk about here. But yeah, definitely cool stuff. So tell us how you've been. I assume everything is status quo, that we're chugging right along.
I mean, it's been a very crazy 18 months since the last time we spoke. The real estate market has changed dramatically for multiple reasons. And then 2024 just happened to be kind of a massive culmination of so many things, like historically speaking, statistically speaking, and then laws changing as well. So it was the culmination of interest rates and election and a changing market and the NAR settlement. So it was a lot of navigation. It felt like 2008 again, really.
Yes and no.
Yeah.
There were obviously some significant differences between being a real estate agent and being a loan originator that felt a little different between 07, 08 and 23, 24. 24 was definitely a strange year to be in real estate. I saw a stat recently, and obviously I know that 88% of the stats you read online are made up.
Right.
But it said something like it had been the lowest number of real estate transactions coast to coast in like 35 years.
I'm not surprised.
Okay.
I'm not surprised.
Okay, so that could be legit or something close to it.
I mean, I think in Denver we saw a little bit less. Denver tends to not follow the 100% of the trend most of the time. But I would say every top producer I've spoken to has had a rough year, almost like surprisingly so. So, and mortgage brokers especially. So,
I don't think it's the same.
No, not the same, but it's definitely been affecting a lot of people's business.
Oh, sure.
Your markets.
Absolutely. I think that that's very true. I do think that there's something to the fact that, and I don't know what the statistics will look like. Obviously, the influx of people coming into the real estate industry, coming in to be real estate agents, is still significantly higher. Certainly a different set of prerequisites, qualifications, so on and so forth. You rarely hear about a new mortgage originator. I just don't think there are people that want to do the job. I've got a colleague, a client actually, whose son wants to be a loan originator, has not been able to pass the exam after several attempts.
Okay.
And
not easy.
It's hard, no question. And I think we decided that a year ago, or getting on it 11 months ago, that 60% had failed to renew their federal mortgage license.
Oh, wow.
So smaller pie, but bigger pieces.
Yeah. Slim pickings, I guess.
Yeah, I don't know if that's true with real estate agents, though.
Well, we saw a decrease. Pretty much everyone that was doing it very part-time wasn't able to, the squeeze wasn't worth the juice for them anymore, and then people like me who do this full-time just saw an increase in work, but a decrease in closings, if that makes sense.
There's a really good example. You're probably doing triple the work. Every transaction feels like 3.
Every transaction feels like 3. They're falling out of contract more often. I mean, I had never had a deal terminate. I mean, we're talking 20 years that I hadn't had deals terminate. And now I think the statistic was 30% of deals fall out of contract in Denver Metro. So, I mean, that's just an indication of how picky buyers became really quickly, how hard a time sellers were having, that their houses weren't 2022 pricing.
I'm disappointed in that too.
Right.
Yeah,
Aren't we all, really?
as a real estate owner, yes, I'm disappointed in that as well. So a lot of big catalysts for change over certainly over the time frame since we've had you on the show. Do we want to rehash what went on with the tort lawsuit and
Sure.
the changes in commissions? And I don't know that that's really a change. I guess really all that I think changed was the need for better communication, the need for more clarity. And I think the agents that have been doing this as long as you have at the level that you've been doing it really didn't have to change anything.
I haven't had to change anything so far. I mean, it's only been a few months that these rules have been in place, but I think there was so much misinformation out there. And I would have clients say, oh, I heard we don't have to pay the buyer's agent anymore. That's so great. Or now my commission's cut in half. And I'm like, okay, let me reframe this narrative, because I feel like what people had in their heads was that the seller was paying for the person working against them and the person working for them, which was actually never the case, nor was it ever not negotiable. There might have been agents out there, even entire cities, who made it seem like, oh, yes, you have to do this, you have to do that. No one's ever had to do anything. So I think that got it kind of out there, where the education point that I have to make to my people is significantly different. But in reality, the only person bringing a dollar to the table is the buyer. So technically, the buyer's paying their agent, their down payment, their closing costs, and all of the seller's equity and the seller's agent. They're the only ones with cash in hand, So I kind of think we have to pull back and just decide that the transaction is fortified enough to pay both parties, and how and why is what needs to kind of alter people's understanding, if that makes sense.
I think, and you're right, it's always been the case. And I think it's been fascinating to watch how the optics have shifted a little. We used to joke about the fact that, well, if you're representing buyers, then the optics are that the seller pays the real estate costs. The seller's already negotiated with their agent. And if you're representing a seller, then your optics are that the buyer pays that. It's included in the purchase price. They're bringing the money to the table. And then in jest, I always say, no, screw you all. It's the loan originator that's paying it. I'm the one giving you the money.
True. Also true. Right.
So yeah, we thought that was always entertaining, but I really don't think all that much has changed, other than the fact that these tort lawyers line their pockets in a pretty good manner.
Exactly. Yeah, I mean, they made out really well.
Yeah. Well, better than anybody. Right. No question. Right. I definitely think it was a disruptor in the real estate industry.
I do. I agree.
I think that the consumers that were all plaintiffs in the class action lawsuit, I think they all got like $25 a piece. It was something ludicrous
that didn't really benefit them. For dinner.
You can supersize. Absolutely. Right. Now you can supersize. Right. Yeah. Well, dinner for one, maybe. Dinner for one and a half. Yeah. Right.
Yeah, it's kind of expensive.
That has. I saw some funny metric about that this past week as well. What it cost to get a dinner at McDonald's in like 1995 versus 2025.
Yeah.
So that was certainly an interesting break in the pattern, break in the wavelengths of what went on in the real estate industry historically. And probably one of the more significant ones. I think that, and I've been at this about 25 years. So I've seen some ups and downs, some things change. Obviously, a lot of real estate agents come and go. Historically, NAR always told us that 80% failed in the first 2 years, that kind of thing. But yeah, I don't think I can trace back another factor that was as big a deal as this one, but it could be because of a couple of other factors that we don't really consider when we're narrowing it down to specifically real estate or mortgages or whatever the case may be. The first one being that we are now absolutely in an arena where the media is strictly part of the entertainment industry.
Oh, yes.
And you've got to understand you and I and all of our brethren and all of the consumers out there need to understand that they want to sell their wares just like the rest of us. Very
Right.
capitalistic.
Right.
On top of it, so it's twisted. Let's not forget that it's not, I don't even know how to describe accurate because we're so far off the mark from that. But media is definitely a unique animal now. And now we have the inception of social media. So if we think things get twisted in the media, boy, once they hit social media, they get even more twisted. So much misinformation out there.
Oh yeah, I had to stop watching because it made me like an animal, basically.
Likewise, I literally became volatile about some of this, and mostly with our brethren.
Yes, agree.
So much social media activity around the fact that, well, now I can't let people into my open house without a buyer's agreement. You know, the law changes August 17th or whatever it is. If you want to go see an open house, you have a buyer's agreement. It's like, well, no, that's not the law. No, well, that's what my company says. Okay, well, if you don't like your company's policies, you can change companies. But the only people involved in making or enforcing law when it comes to this is actually the Financial Crimes Enforcement Network at the Department of Justice.
Right.
So, yeah, well, my realtor board said that I had to do. Well, then change realtor boards.
Right.
Drop your board. You don't even need it for access to the MLS anymore. That also changed pretty dramatically.
Yeah.
Well, the state association, nope, stop. Everybody stop. Because your company, your board, your state association, even the National Association of Realtors do not make or enforce law.
Correct.
They don't have anything to do with that.
Correct.
So if you don't like what you're being told to do from any of these organizations, then change it up.
Yep.
Okay. I don't think that was really a big deal to the agents that have always been successful and are continuing to be successful because you've kind of always done business this way.
Yeah, always.
Your sellers know what's going on. Your buyers know the score.
Right.
And we're putting deals together.
It added a few more steps, but I don't feel like those steps were in a negative manner. In fact, I feel like I can explain my value a lot more when I'm trying to justify how I get paid. And I think explaining your value is more important now than it has ever been, even though it always should have been intrinsic in your business. I think in 2021 and 2020, there was an ease to it because the market demand was so high that I had many transactions with agents who didn't know what they were doing and still got paid in the end. And, I thought I'd like to weed some of these out. It's not an easy job by any means. And if you treat it as such, you're going to fail.
Yeah, but HGTV says it is.
I know. They also say it only costs $8,000 to do a kitchen. So
okay, fair enough. Yeah, that's true. To do a kitchen refrigerator.
Right.
Okay. That last word got cut off. That's all that though. The editing, it's on the editing floor. And yeah, obviously again, social media really making it difficult to see through the bullshit.
Yeah. Right.
And what really goes on. So what do you think is attributing? And I do agree with you. I think we're roughly at about a third of transactions falling out right now, at least Denver Metro. I would assume that we're similar to other major metropolitan areas, Portland, Atlanta, LA, New York, Seattle, San Francisco, whatever. What do you think is attributing it to that? I mean, are we having value issues because we've obviously leveled off here? I've got to assume a lot of other major markets have maybe even seen a decline.
So
seems to be typical.
What I think happened, we all know what happened. Interest rates started to rise and consumer buyers, agents and buyers started having a little bit more leverage in the market. And because values were going down. So sellers are still stuck in 2020. Buyers are stuck in their minds. I've had people terminate because they felt that the 4-year-old furnace that it was dirty and the people didn't take care of it. And what else are they going to find? I think buyers have just gotten a lot pickier, almost like in a vengeance kind of way. Like, oh, well, you could just buy whatever you wanted or sell your house for whatever you wanted 2 years ago. Well, now I'm in charge. I feel like there's been this shift. And then sellers just haven't quite wrapped their minds around the fact that I mean, we were getting a lot of inflated value simply because of the scarcity. You know, if you're in a desert and someone has $100 and someone has a Coca-Cola, you're going with the Coca-Cola because that's what you need to survive. So in the real estate market back then, you just wanted a roof and a door, and you did whatever you did. You waived your inspection, you waived your appraisals. People were getting just asinine dollars for their homes because there were 80 people for every one property. Now that has shifted. So now people don't want to buy your house because of the paint color, or they still haven't swallowed the fact that 2 years ago they could afford an $850,000 house, and now for the same mortgage they can only afford a $600,000 house.
Yep.
And that $850,000 house hasn't come down to 600 yet.
That's a big one.
So
and it won't. And obviously,
I hope not.
From the consumer standpoint, you guys have got to understand you can repaint the house. Paint's an easy one. A 4-year-old furnace is obviously brand new in the grand scheme of things, et cetera, et cetera. I do love the revenge comment, though, and I do think that there is actually some hypothetical sincerity to that.
Like a little.
There is a little bit of a mindset. And I think the factor, and you would know better than I would, but historically through all this time, and we've been doing this a very long time, you and I, that we had always had a 6-month inventory as the definition of a balanced market.
Balanced market, correct.
Right. Okay. So in the Denver metro area, and for those of you that aren't familiar, we have 7 counties here that make up the Denver metro area. And if you're not familiar, Denver is actually a very small footprint and population in comparison to the metropolitan area. And we would need something to the tune of 30 or 35,000 listings at any given moment to have a 6-month inventory. And we've got about a third of that right now. Which happens to be the highest the inventory's been in like 12 years.
Yes, also true.
So are we just not hitting the nail on the head when it comes to the definition of a balanced market anymore? Does a 6-month inventory no longer define that? Does a 6-month inventory in the Denver metro area really now mean 15,000 instead of 30,000? I mean, what is our DOM looking like these days? I figure about a month.
Between 30 and 40 has been pretty typical. And we've seen a small uptick in the last couple of weeks since, I don't know if it hinges on the election or not, but I think people have kind of calmed down and like settled on the fact that, okay, now we know who's going to be in office. Now we know that the Fed has dropped the rate 3 times. So eventually mortgage rates are going to go down, which we have not totally seen yet. But I feel like people are starting to emerge back in the market. We haven't seen like a significant rate decrease in the mortgage industry so far. I mean, we're still.
Well, we have since they peaked in October of last year.
Yes, since
that
they were
was obviously insane, right?
Yes,
we've had a really nice trend. Well, we did have a really nice window. I want to say like August, September.
Yep,
rates were down significantly,
6.25-ish.
Oh, much lower than that. They're probably lower than that today. And we've had literally since the beginning of November a slow, steady trend. In fact, if you asked me historically from the time I've watched what goes on in the mortgage-backed securities market and mortgage rates, we're probably right about where we should be if we actually had a healthy economy.
I agree. I was thinking, in my opinion, I think like mid-5s, everybody's happy. Like
that's where we should be.
Expensive, and there's a nice general cash flow going around. Banks are making money. Consumers aren't paying through the nose. I mean, I don't know why they just don't set it like that. But I know we're in a capitalist society, so that's not the case.
Yes. But that is about where we are, particularly on government paper.
Yeah.
We're mid-5s. I did see a loan last week, and rates have come down a little bit since, where borrower was able to do a no-cost loan at 6%, having all the costs built into the rate.
Yep.
So, we're at a point where we're, for an owner-occupied property, 5.5 to 6.5 is probably realistic. Obviously, full well the loan level price adjustments where we made an attempt, and guys know that most of the work the government does is pure in motivation and crap in execution. Right. We obviously wanted to have these significant loan level price adjustments for second homes, vacation homes, investment properties be significantly higher with the attempt to make more inventory available to what would be owner occupants, people that needed a home to live in. Obviously that failed if I'm getting 15 or 20% per annum return on my
Right.
investment. Do I
Right.
care if the cost to borrow the money is 4 or 7?
No,
No,
you
I
don't.
don't.
You
So
don't.
that was obviously another typical failure along the lines of many, many that Anne and I have witnessed over the
Right.
decades.
Many, many.
But yeah, many, many. But the mortgage market, the mortgage-backed securities market in particular, probably is about where it should be. We did get a little bit of a relief with the election.
Yeah.
A big part of it that we really didn't see in media and social media is that the day after the election was a subsequent Fed meeting, and they lowered rates another quarter point.
Right.
Now,
Right.
you and I know, and pretty much most of our audience is going to know that the federal funds rate, the prime rate, is not directly tied to mortgage rates.
Right.
The Fed deals in very short term rates. You guys saw some relief on your credit cards, you
Yep.
saw some relief on car loans. And obviously, what the Fed does has an impact on everything in the global economy.
Right.
There's not a complete disconnect. There just isn't a direct connection. And mortgage rates have trickled down and probably will continue to do so. The pendulum is certainly swinging the other way. But I think the consumer mindset has become accepting that this is what it is.
Yeah.
This is where we're going to be.
Now it's I think people are finally kind of getting used to it. I mean, when I bought my first house in 2000, my rate was 8.75, and I didn't think anything of it at the time.
That was a good rate.
It was at the time. I mean, I
Yeah.
remember thinking, okay, this is what it is. We just had this heyday of just astronomically low rates. I mean, my parents still talk about how they paid 18% in the Carter administration. So
Yes, mine too.
been worse.
Which was a really good rate, prime plus 2,
Right.
which would still be considered a fairly good rate.
Right.
Prime plus
Right.
2, right? That kind of thing. But it was the first time all of us had experienced a pandemic.
Yes, it was. And that changed a lot of things. It changed the way that we do business. I feel like I've been telling my clients, if we were to take 2020 to 2023 and just delete those years, and we just went from 2019 to 2024, we're in a totally normal market. You know, we've
Yeah.
increased from our 2019 prices, just a normal, 3 to 5%
Percent a year, yeah.
increase. Everybody's happy. We just have to disconnect ourselves from what happened over this very strange 3-year period where we also saw a global pandemic. I mean, there was a lot of factors that you can't quantify, and how they affected things. And then everyone was getting free money for a while, and they put that right back into the economy. I mean, there was just so many factors that you can blame for the situation. But I guess to me, a balanced market is having more than 3 days to make a decision on a house.
Yeah.
I mean, if you want to translate it into what it looks like, it means
There were
you
people
go
that
and
got
see.
3 days.
I mean, back
Wow.
then it was 3 hours. You had 3
Right.
hours to decide, and now
Yeah,
I
if you're
feel
not
like
20 minutes away from this house, we may as well not go look at it.
right, exactly, exactly, and this is better. It's not exactly how I'd like to see it. I'd like to see it where the leverage isn't so heavily in the seller or the buyer's hands. But it is. I mean, unfortunately, we saw a seesaw effect overnight. Like there wasn't even time, to take a nap between it being a seller's market and becoming a buyer's market. It literally felt like a 3-week period of time, and
Which is strange because
yeah,
the statistics don't define it that way.
right.
We still
Right.
have an inventory
We
shortage
do. Right. We do have an
in a
inventory
buyer's
shortage.
market. That's the first time I've witnessed that.
Yeah, we do. Because a lot of people, I mean, I think, again, a lot of people had to wrap their minds around. I mean, my husband and I are wanting to buy another investment property right now. And with the rates even still where they are, there's no way to cash flow, period. It's just not possible. So, I know that people are they have to just stomach the fact that they can no longer afford the $850,000 house that they could have afforded 2 years ago. For the same, they're paying the same $4,000 a month mortgage as they were for a much nicer house before. And I think it could take a couple of years for that to really balance it out and for you to swallow the fact. I mean, my new buyers that are coming in that have never bought houses before don't know any different. They don't see it as this shocking thing. But my second and third home buyers are throwing up a little bit because it's just, your money could just go so much further before.
True. I think when it really was eye-opening for me, and you'll absolutely be able to get your head around this, and I know our audience will. I don't know that the consumer will. And I'm a mortgage guy, so I'm
Right.
going to make sure that I am exercising what's best for my finances when the moment is taught. And obviously, we make sure our clients know what those are. I have a good number of mortgages. They're all in the twos. And on my primary residence, my taxes and insurance now exceed a third of my total payment.
Same.
Because the mortgage is so low, while the taxes have skyrocketed.
Yep.
I think we saw, and we're about to see another CPI. In fact, it's funny because there was a gag order with the current Fed, their current policy to not discuss anything in the Fed monetary policy until the next Fed meeting later this month, with CPI data coming. That I think we saw that property and casualty insurance, so for those of you that are out there, your cars, your homes, was either the first or second most significant increase to consumer spending during that run of inflation that we're just now seeing the tail end of.
It literally tripled.
Also making a big impact on what people can actually afford when it comes to buying a home.
Yeah, with the high rates and that, you're in, I mean, it feels like home ownership is so difficult. Plus your down payment and the benefits that you get by putting 20% down, when I'm like, huge benefits for putting 20% down, but people don't always have 20% down and the closing costs and, these exorbitant rates for insurance and taxes. It makes home ownership a little bit less attainable than it was a few years ago.
Is that going to continue?
I don't think so. I mean, again, I'm not a magician, but
my crystal ball's in the shop, so that's why I'm asking you.
Right. I think it will. I think that home is a refuge. Everyone needs one. So nothing has ever really changed year over year over year. We're always going to be transferring property like the beginning of time. And I think that we just have to navigate through the waters of change and we look at it differently. I mean, back when our grandparents bought homes, there were no mortgages. You just had to buy the $3,000 home in cash when you could afford it. And then we went where you could borrow 125% of your home's value, back in 2006, 2007. Yeah. So, we just have to operate within the means of the market. I call it real estate gymnastics. Like, it just changes and we shift and we pivot and we make it work. And I do think when the rates come to the low fives, like when we hit that kind of 5 mark, I think we're going to see a large uptick. I also think 2025 is going to be the year that the real estate market goes back to normal. It's far enough from the 2 and 3%, and it's far enough from the 7 and 8%. That I feel like people can go see a handful of homes in a weekend, maybe take a couple of weeks to decide on a few homes, a few properties, make an offer that's a legitimate offer. Maybe it's at asking price, maybe it's a few thousand less, maybe it's a few thousand more, and then everybody's happy. We close in 30 days. I think that's how the market was for me a few years since 2003. And it just seemed like everyone felt like, okay, I'm getting a good price. They're getting a good price. Buyers and sellers seemed a little bit happier. Right now, the shift is just such a chasm that I feel like someone is extremely disappointed in every transaction.
I think you just described the market in 17, 18, 19.
Yep.
And probably in 02, 03, 04.
02, 03, 04. Yep.
And that may be about it in the last quarter century.
Yeah.
Wow.
That's about it.
But you're confident, crystal ball being in the shop, mind you, that your kids will be homeowners. Their kids will be homeowners.
I'm confident in that. Okay. I think that the government does take the shifts and do certain things to make homeownership a little bit more affordable. Like the fact that you can put 3.5% down, the fact that VA loans and physician loans still exist. I mean, there are some things. Once you get your foot in to the market, I feel like you have it. So I think as we expand first-time home buyer situations, which I'm hoping are around when my children are in the market, because not everyone has a parent that's going to be able to help with the down payment. I think the down payment is the hardest part. So I think that I hope that the mortgage industry keeps recognizing first-time home buyers as a chance. I mean, they can make the payment. It's not a problem to qualify. It's getting in at that ground floor. If we have programs like that, like CHAFA, that don't often work in a seller's market on an offer, but
Right.
we have more of those situations, I feel like home ownership is always going to be achievable. And if it's not, if we go through a 5, 6, 7 year period where no one can afford to buy anymore, I guarantee something is going to change, because I don't think we will allow such a chasm between the rich and the poor. There's got to be some sort of give.
It's a pretty big chasm these days.
It is. It's a huge chasm.
No, the haves and have-nots.
Yep.
I would agree with that. And I knew we were going to run over because I want to pick your brain about all these kinds of things.
Please. I love it.
Okay, good. So from the perspective of, oh gosh, I don't even know that I would define it as relatively new agents, but agents that haven't experienced decades of the level of success that you have, what should they be doing? What are the 3 things going into 25 that they should be mindful of, prepared for, thinking about to stay on track, to stay in the game?
In my opinion, it's training, and more training. I think
a lot of education.
A lot of education. I think a lot of agents went into the market thinking, well, I'm just going to slap my sign in the yard and it's done, and
now wait a minute, because I'm going to get to hang out with my kids and my schedule's going to be flexible, and I'm going to see some cool houses and I'm going to make a lot of money.
Right. And I'm going to travel whenever I want to do. Yep. And I'm going to make so much money that I'm going to make like $1,000 an hour like that, And I think
I'm going to work from my yacht.
Exactly. And there was a time that you could. When I started the market, you had to work your tail off to establish yourself and get business. And I think that training boded well for me in this past couple years. So I encourage all new agents, learn everything that you can, talk to other people that have been in every situation that they have been through and experienced, and talk through how to get through it and how to establish your value, establish your worth, stay in front of your people, build those relationships, stay in front of them, always put their needs first. The moment that you think about getting paid is the moment that you failed that transaction. Of course, that's the end result, but don't work for one paycheck, work for 1,000 paychecks. I mean, that's always been my advice.
Yes.
It's not always a good move to close on a property. It's not always a good move to sell. It's not always a good move for me to get paid when it doesn't behoove you to do this transaction, So I think that the moment that you establish that you've been through everything, that you're still learning, and that you still don't have all the answers. I will never, ever, I tell all of my colleagues, do not ever say that you know the answer when you don't. It is perfectly acceptable to be like, you know what? I don't know. I don't know.
Get that answer.
I will get that answer, instead of just, making up this whirlwind tornado that will follow you for the rest of the transaction.
Or longer.
Yeah. So, I mean, I think if you're going to be a good agent, then you have to establish your worth more than anything. I mean, I've been competing with the internet and Zillow for, 12 years now. And there's something to be said for the human being that brings truth and value to the transaction and truly puts your needs before their own. That is, I think, the key. If you follow those objectives, you'll always do well.
Well, I'm not going to admit as to how old I am or call you out, but obviously there's some real Zig Ziglar shit in there.
Yep.
And I think right. I think all these new agents that we're kind of addressing here aren't going to know who that is. But the colloquialism, I think, is all you have to do is help as many people as you can get what they want.
Yep.
And you're going to get what you want.
It's true.
As soon as you put yourself into a client-centric position, what's best for my client, what's best for their dollars, obviously a little different in the mortgage space than in the real estate space, then everything else will fall into place.
It does. Yeah. It does. Cool. I pretend that they're all my family members. So if I have a client, I'm going to do the same that I would with them as I would with my sister, my husband, my father, my mother, my aunt. If I treat them like that and they trust that that is the case, then they'll trust my guidance when I say, I actually think this is a good deal. I would move forward on this or whatever. That trust relationship is key. It is absolutely key. And I know too many agents that don't care about that.
Wow, that's too bad. Because I'm going to give all of you watching or listening live or in syndication one more little piece of this since Anne brought it up. And I know we're running over. Everybody cut us a little slack.
Mhm.
If your clients trust you, they will trust your process. It will make your transactions so much easier. Hey, I need this document. Humans are the only species that ask why. I call the dog comes. The dog doesn't ask why.
Right. He does
Humans ask why. If they trust you and you tell them, hey, I need XYZ, they'll just say, okay.
Yep.
Because they trust your process. That
Agreed.
will make your transactions smoother. That will make your support team happier, your TCs, your LOAs, all of these kinds of things. So yes, without equivocation, all of you, Anne hit it on the head. You must establish that factor of trust. They have to trust you.
Yep.
And yeah, I guess if you treat them all like family, then you're probably.
And you saw, if you read all of the comment section, which I had to stop myself going down that rabbit hole. But if I watched all the memes about the NAR settlement, and if I read those comments, I'm like, oh my gosh, people think that we're like serial killers. I mean, they think that agents are just the scum of the earth. And I'm looking at that thinking, I don't think any of my clients feel this way about me. And that boils down to trust and care and commitment to them and their needs.
Well, we were also leading into an election cycle back in August. So,
also true.
So all realtors and all political candidates were murdering baby rapists. And that's what your opposition wanted you to think. Yeah.
Right. Exactly. Exactly.
Well, Anne, thank you. I'm sorry it had been so long since we'd had you on the show. We will rectify that for next time around.
Love to.
We'll get you booked for another time slot. And for those of you that didn't know, we did make some internal changes. Our original guest for today had something come up. And Anne, thank you so much for being flexible and helping us move that schedule around a little bit and getting you on the show this season instead of next season.
Thank you so much.
Oh, no, my pleasure. Carving out this kind of time on a Monday, I know, is not easy to do. So thank you for that. And for the rest of you watching or listening live or in syndication, you can catch new episodes, the video cast of How I Met Your Mortgage, on Mondays at 9:30 Pacific, 12:30 Eastern on Facebook, LinkedIn, and YouTube. And a mere 48 hours later, the podcast is up on Apple, Spotify, and Amazon, pretty much everywhere that you would get your podcasts. And we will be back next week with another live episode of How I Met Your Mortgage. And in the interim, if you want to find out anything about Just the Tips coaching, if you want copies of my books, either Just the Tips or Mindset Tools for Sales, or you want to find out about the annual conference that we do for agents and originators, all of those things can be found at justthetipscoaching.com. And thank you. I'm going to run our extra. If you'll hang out with us just for a moment, I'd love to catch you for a minute after we are done with the broadcast.
Perfect.
And for everybody else, thanks for tuning in, and we'll see you next time.
Thank you.